Section 1. My $10 mistake. Let's get something straight. Everyone starts somewhere. That somewhere is small, confusing, a little bit embarrassing. I remember when I was just getting started, long before YouTube, real estate. I scraped together my first $100 to invest. It felt like a fortune. I spent weeks researching, fell down a dozen rabbit holes, finally picked a stock I was sure was the one. I bought it, checked it 10 times a day, and watched it do absolutely nothing. Then, it went down. Panicked, I sold it for a loss of about 10 bucks. That $10 loss felt like a catastrophic failure. I thought I just wasn't cut out for investing. It was a stupid, emotional decision driven by fear. The lesson wasn't about the stock pick, it was about my mindset. I was treating investing like a lottery ticket, not a long-term strategy. That $10 loss taught me patience, the danger of emotion, and the importance of having a plan. It's a story I don't tell often because it feels so small and silly now, but it was the first, most crucial step in a very long journey. It's why I believe the amount you start with is almost irrelevant. The act of starting, making that first tiny move, learning from it, is everything. This isn't about getting rich overnight, it's about proving a point. The point is that the barrier to entry is gone. You don't need a trust fund, a finance degree to begin building wealth, you just need a smartphone and $10. We are going to start the clock right now, on January 6th, 2026, and project what this tiny seed could grow into over the next 10 years. It's the $10 ETF 10-year challenge, and it starts right now. Forget the complexity and the jargon. We are going to make this so simple, so straightforward, that there will be no excuse left not to try it. We will walk through every screen, every tap, every confirmation. I'll show you the exact ETF I'm buying and give you the one-sentence reason why. Then, we'll do the simple math to see what the future might hold, looking at a few different scenarios: conservative, optimistic. This isn't financial advice, it's a demonstration. It's a transparent look at how the most basic principle of wealth creation works in the real world, starting with less money than you'd find in the average sofa cushion. The entire concept of this challenge is to demolish the biggest myth in personal finance, that you need a lot of money to start investing. That's just not true anymore. In 2026, the game has completely changed. Brokerage apps have made it possible to open an account for free, transfer money instantly, buy a piece of the world's largest companies for pocket change. The goal is simple: take $10, invest it in one popular ETF, and calculate what it could become by 2036. So, what exactly is an ETF? Think of it like a basket that holds lots of different stocks: Apple, Microsoft, Amazon, thousands of other companies. By buying one share of an ETF, you own a tiny piece of every company in that basket. This is diversification. It spreads out your risk. We're not trying to be stock-picking geniuses. We're not day trading or hunting the next meme stock. We're buying a broad slice of the market. Historically, the market trends upward over long periods, surviving recessions and crashes. Slow, steady, boring, precisely why it works. We'll use a real brokerage app and show the exact buttons. Deposit the $10, find the ETF, execute the buy order. Then we'll run the numbers. Low, moderate, high return cases. We'll also cover fees, dividends, taxes. The goal: demystify this and prove you can start today with whatever you have. Alright, let's get this done. The first step is the easiest. It's also the most important. It turns intention into action. Now for the crucial first step. We need to get our $10 out of a savings or checking account, where it's likely losing a little bit of value to inflation every single day, and into a brokerage account where it can be put to work. A brokerage account is simply a specialized account designed to hold investments like stocks, bonds, and funds. Think of it as the garage where you'll park your financial vehicle. For this, I'm using a popular commission-free brokerage app right on my phone. The term commission-free is a modern marvel for small investors. It means the brokerage doesn't charge you a fee every time you buy or sell. In the past, these fees could be $5, $10, even $20 per trade, which would have made investing just $10 completely pointless. Today, that barrier has been completely demolished, opening the door for anyone to start with any amount. When you search for a brokerage app, you'll see a lot of options: Robinhood, Fidelity, M1 Finance, Vanguard, Charles Schwab. The list goes on. Some are geared towards active traders, others focus on long-term passive investing. But here's the secret: For what we're doing, making a simple, foundational investment, almost any of the big reputable names will work perfectly. The core functionality of depositing money and buying a major fund is universal. The interface looks very similar across these apps, because they're all competing for your business. They invest millions into making their apps as intuitive and user-friendly as possible, which is a huge advantage for us as beginners. Don't get stuck on picking the perfect one. Pick a well-known, trusted one and get started. It all starts with opening the app. I'm already logged in, but if this were your first time, you'd go through a quick, secure sign-up process. It's similar to opening any other online account, but you will need to provide information like your social security number for tax reporting. This is standard and required by law. Once you're in, the mission is simple. Find the money button. I'm looking for a button that says transfer, deposit, add funds, something along those lines. It's almost always located in a prominent spot on the home screen or within your main account tab. They want to make it as easy as possible for you to give them your money to invest. I tap it and go to a screen to link a bank account. My checking account is already linked and ready to go. If you're doing this for the first time, the app will securely connect to your bank using a trusted third-party service like Plaid. You'll just sign in with your normal online banking username and password, and the connection is made in seconds. It's encrypted and safe. With the connection established, the app now asks the big question: how much do I want to transfer? This is a moment where a lot of people freeze. They see that empty box and think they need to have a huge, life-changing amount of money to get started. They feel like anything less isn't worth it. We have to break that mental block. I'm not typing 1,000 or 10,000. I'm deliberately and proudly entering 10.00, $10. The cost of 2 fancy coffees. I hit review. The app shows a confirmation screen, giving me one last chance to check the details. A $10 transfer from my linked bank account to my brokerage account. Everything looks correct. I double-check and then tap the final button. Confirm transfer. Submit deposit. Whatever the final call to action is. And just like that, a second later, a notification pops up. Your $10 deposit has been initiated. It's done. The money is on its way. Now here's another piece of modern magic. While the actual transfer of funds from your bank might take a few business days to fully clear, most brokerages give you instant buying power for small deposits, often up to $1,000. This means they are essentially fronting you the money because they are confident your transfer will go through. I don't have to wait several business days to act. The $10 is reflected in my buying power and is ready to be invested immediately. This removes friction and lets you put your money to work the moment you feel motivated to do so. And just like that, the hardest part is over. Let's pause and appreciate this moment. We went from $10 sitting in a bank account, passively losing value to inflation, to $10 in an investment account poised and ready for the market. Look what wasn't involved. There was no paperwork to print and mail, no phone calls to a broker in a suit, no confusing jargon-filled forms to fill out. This entire process took less than 2 minutes. This is the modern reality of investing. The barrier is no longer access, or specialized knowledge, or even a large amount of capital. The single biggest barrier for most people is the psychological hurdle of just doing it. Of taking that first, small, simple step. You've just watched me do it, and now you know exactly how. With our $10 of buying power ready to go, we've arrived at the most important question. What should we actually buy? This is the moment where so many aspiring investors get stuck. The universe of stocks, funds, and other assets is absolutely massive. You're bombarded with information from every direction. Financial news channels shouting about the day's winners and losers. Social media buzzing with the next meme stock that's supposedly going to the moon. And endless articles promising to reveal the secret to picking the perfect investment. It's a classic case of analysis paralysis. The sheer volume of choice, combined with the fear of making the wrong one, can be so overwhelming that it's easier to just do nothing at all. But we're not going to let that happen. We're going to cut through all that noise with a clear, simple, and powerful strategy. My philosophy, especially for someone just starting out, is to keep it brutally simple and incredibly broad. I'm not trying to be a stock-picking genius. I'm not looking for a niche, speculative play, which is just a fancy way of saying I'm not trying to gamble on a single company that might become the next big thing, or might just as easily go to zero. That's a high-risk game that even most professionals can't win consistently. Instead of trying to find the one magic needle in the haystack, my goal is to buy the entire haystack. I want to own a tiny piece of the whole market, or as close to it as I can possibly get with a single click. This approach is called passive investing, and it's built on the idea that you don't have to outsmart the market. You just have to participate in its long-term growth. That's why I'm choosing the Vanguard Total Stock Market ETF. ETF stands for Exchange Traded Fund, which is essentially a basket that holds hundreds or even thousands of different stocks, all bundled together into a single investment you can buy or sell on the stock exchange, just like a single stock. The one I'm picking trades under the ticker symbol VTI. If you spend any time in personal finance circles, you'll hear this name come up again and again. It's one of the most popular, low-cost, and widely recommended funds on the planet, and for very good reason. It's the quintessential set-it-and-forget-it investment for building long-term wealth. Here's my simple, one-sentence explanation. I picked VTI because it gives me ownership in over 3,500 US companies, big and small, for an extremely low fee. That's it, let that sink in with one purchase. I'm not just buying Apple or Microsoft, I'm buying them alongside thousands of other companies across every single sector of the American economy, from technology and healthcare to manufacturing and retail. I own a piece of the giants, the mid-sized growers, and the small, up-and-coming innovators. This isn't a bet on a single horse, it's a bet on the entire race. By buying VTI, I am essentially betting on the long-term success and resilience of the entire American economy. Since I own a piece of everything, it all balances out. If one sector has a bad year, another might have a great one. If a few large companies stumble, thousands of others are there to pick up the slack. This level of instant diversification is incredible, and it's the most effective tool for managing risk. It smooths out the ride, protecting me from the catastrophic failure of any single company. So let's find it in the app. The process is straightforward on any brokerage platform. I go to the Search or Explore tab. In the search bar, I simply type the ticker symbol, VTI. The app immediately pulls up the ETF, showing its full name, Vanguard Total Stock Market ETF, along with the current price per share and a performance chart. As of this morning, January 6, 2026, VTI is trading at around $250 for a single share. Obviously, my $10 isn't enough to buy a full share. Just a few years ago, this would have been a roadblock. I would have had to save up $250 just to make my first investment. But that doesn't matter anymore, thanks to the magic of fractional shares. This feature, now common across most major brokerages, allows you to buy a slice of a share based on the amount of money you have. With my $10, I'll be buying about 4% of a single share of VTI. It may sound small, but it means I'm in the game, fully invested, and earning the exact same percentage returns as someone who bought a full share. Now let's talk about the other critical reason for choosing VTI, its expense ratio. This is the tiny fee the fund manager, in this case Vanguard, charges annually to manage the ETF. It's expressed as a percentage of your investment. For VTI, this fee is a minuscule 0.03%. Let me put that into perspective. For every $10,000 you have invested, Vanguard charges you just $3 per year. That's it. It's about as close to free as you can possibly get in the investing world. This is a core tenet of the Vanguard philosophy, pioneered by its founder John Bogle. Keep costs down so that investors can keep more of their returns. High fees are a silent killer of long-term returns. They're a guaranteed loss you take every single year, regardless of how the market performs. An actively managed fund might charge 1% or more, which sounds small, but over decades, that difference can erode tens or even hundreds of thousands of dollars from your final portfolio value. It's a constant headwind working against your growth. By starting with one of the absolute lowest cost options on the market, we're eliminating that headwind from day one. It's one of the few things we can actually control in investing, and it ensures that more of my money stays my money, working for me. Alright, the moment of truth. We have our $10 ready to invest. We've done our research and picked VTI, the Vanguard Total Stock Market ETF. We open our brokerage app, navigate to the VTI page, and we see it's trading at $250 for a single share. Now, in the not-so-distant past, this would have been a hard stop. You'd have to painstakingly save up $250 just to buy one unit of this investment. For many, that was a significant barrier to entry, a wall that kept them on the sidelines. But this is where the modern financial world, specifically the innovation of fractional shares, completely changes the game. It democratizes access to the market in a way that was previously unimaginable. Today, nearly all major brokerages let you bypass the share price barrier and buy by the dollar. Instead of telling the app buy one share, I can simply tell it, buy $10 of VTI. The brokerage then executes the order, giving me a tiny slice of a full share. The best analogy is buying pizza. A full share is the whole pie. With fractional shares, you can buy just one slice instead of the whole thing. You still get the same delicious taste, the same underlying ownership, the same exposure to potential growth, and even a proportional share of any dividends paid out, but in a portion that fits your budget. This is made possible because the brokerage buys whole shares and then divvies them up among its customers. It's a simple concept with profound implications for building wealth over time. So, let's do it. Here on the VTI page in the app, I'll tap the Trade or Buy button. The app immediately presents me with a critical choice: buy in dollars or buy in shares. This is the fork in the road. Since we don't have the $250 for a full share, our path is clear. I'm going to select buy in dollars. This tells the app that the amount I'm about to enter is my total investment, not the number of shares I want. Now the app prompts me for the amount. I'll use the numeric keypad to enter our $10. Watch the screen closely. As I type in 10, the app instantly calculates and displays an estimated shares figure. Based on the current market price of $250 per share, my $10 investment will get me approximately 0.04 shares. Yes, it's a small fraction, just 4% of a single share, but don't dismiss the power of this. This tiny fraction represents a real tangible ownership stake in thousands of US companies. This is not a simulation. This is your official entry into the world of investing. It's a start, and every great journey begins with a single step. Before finalizing, the app presents a review screen. This is a crucial habit to build. Always pause and double-check your order. I see. Action. Buy. Ticker. VTI. Amount. $10. Order. Type. Market order. Everything looks correct. Now, I'll slide to confirm. The app sends the order to the market, and within seconds, there it is. The order is filled. A confirmation screen pops up, making it official. Your market order to buy 0.04 shares of VTI has been executed. Immediately, the app sends a push notification and generates a trade confirmation receipt. This is your official record. It breaks down the transaction. You bought 0.04 shares of VTI at an average price of $250 per share, for a total cost of $10. There are no hidden fees for this trade, which is a standard feature of most modern brokerages. This $10 is now working for you. It's no longer just cash sitting in an account, it's a productive asset. You now have a tangible stake in the market. And now, the best part. I can go to my portfolio screen, and there it is. My position in VTI, currently valued at $10. Tomorrow, the market might dip, and it could be worth $9.98. The day after, it might rise to $10.02. This fluctuation is normal. It's the heartbeat of the market, but the key is, it's real, it's yours. This tiny $10 transaction contains the fundamental mechanics of a multi-million-dollar investment portfolio. The process is identical. You analyze, you choose, you execute. By completing this simple purchase, you have officially crossed the line from a passive saver to an active investor. You've done what most people only talk about. You've planted your first seed in the garden of financial growth. Now that we've bought our 0.04 shares of VTI, the hardest part is done. The next phase involves the most powerful force in the financial universe: compound interest. Albert Einstein supposedly called it the eighth wonder of the world. It's simple. Your investment generates earnings, then those earnings generate their own earnings. It's a snowball effect. Your money starts working for you, and then the money it earns also starts working for you. Time is your greatest asset. In year one, say the market earns 10%. Our $10 is now worth $11. We made $1. The next year, 10% on 11 is $1.10. Now we're at $12.10. The extra 10 cents is the return on our return. Pennies now, staggering later. The growth isn't linear, it's exponential. The curve starts flat, then steepens the longer you let it compound. The rules are simple. Be invested. Cash can't compound. Be patient. Early years look flat. Reinvest earnings. Dividends can auto-reinvest to buy more fractional shares and accelerate the snowball. So, our $10 is invested. What could it be worth by January 2036? No one can predict the future. The market is unpredictable in the short term. We'll use historical averages for 3 plausible scenarios. Scenario A, low growth at 4%. 10 times 1.04 to the 10th power, $14.80. A 48% gain for doing nothing after buying. Scenario B, medium at 7%. 10 times 1.07 to the 10th, $19.67, nearly doubled. Scenario C, high at 10%, 10 times 1.1 to the 10th, $25.94, about 160% growth. Summary, low $14.80, medium $19.67, high $25.94. This demonstrates the potential of a long-term, passive strategy, even with tiny amounts. While we're excited about growth, we also have to talk about the real world: fees, taxes, and risk. In the real world, some things can eat away at your returns: the hidden villains, fees, taxes, risk. We picked a low-cost ETF, VTI at 0.03%, fractions of a penny per year on $10, and a commission-free broker. Huge modern advantage. Some funds charge 1% or higher, and some brokers still charge per trade. Always check the fees. Fee drag compounds against you. Dividends are taxable in the year paid, even if reinvested. Profits when you sell are capital gains. Rates depend on income and holding period. A Roth IRA can minimize taxes. Growth and qualified withdrawals are tax-free. Investing isn't risk-free. VTI can and will go down. A recession could take $10 to $7. Diversification helps, and a long-time horizon gives markets time to recover. Never invest money you'll need in the next few years. After 10 years, our $10 investment could be worth $15 to $26. That's not life-changing. You can't retire on that. You can barely buy a movie ticket. If you focus only on the final dollar amount, you miss the point. The real prize is the knowledge you gain and the habit you build. This is your tuition for financial independence. You navigated a brokerage app, deposited funds, researched an investment, executed a trade. You've seen what a fractional share is, how an ETF works, and you have a real stake you can track. What if you automated this? $10 every week is about $520 per year. At 7% over 10 years, that's over $7,500. At $100 a week, over $75,000. The initial 10 is the catalyst. Consistency builds wealth. Don't just think it's neat, do it. Download a reputable, commission-free brokerage app, link your bank, deposit $10. Buy $10 of a broad, low-cost ETF like VTI or VOO. That's it. Less than 10 minutes. Start your 10-year challenge today. The person you'll be in 2036 will thank you.